And speaking of lockdowns, in the UK and England, home buyers are being told to hurry up if they want to secure a new house, not just before they lose movement possibilities, which of course has already happened, but before a stamp duty holiday runs out at the end of next March. There are warnings coming out of the UK of mortgage backlogs and high demand and coronavirus restrictions weighing in there as well. How do you keep a property market humming in lockdown, and what does it mean for UAE citizens and residents who might be interested in UK property? Very pleased to be joined now by Henry Faun, head of the private office for Knight Frank for the Middle East. Henry, good morning. Thanks for joining us.
Brandy, good morning. It's a pleasure to be here.
Tell me the situation, Henry. England in lockdown, what practically does that mean for the property market?
Certainly. Well, we all remember lockdown number 1 earlier this year. Now, practically what this means, things have changed a little bit. This time round, Robert Jenrick, the Secretary of State for Housing, confirmed very early on that both viewings and valuations for the housing market can continue. That means that all of those supporting businesses as well, the removal firms, construction sites, tradespeople can all continue as well, but following the COVID safety guidance, Brandy.
So what does that actually mean, Henry? Everyone's just picking up sofas wearing masks?
Not quite. A little bit more than that, perhaps. Knight Frank have developed a protocol and provided training to our staff to take every reasonably practical measure that we can to ensure our business is conducted in a way that does not expose our employees, customers or clients to any unnecessary risk. Now, ahead of a viewing, I would say that perhaps nearly all viewings these days will take place virtually in the first instance. That means that we can offer a pre-recorded video, a live video stream, or even a 3D walkthrough of some of our properties in the UK. Now, whilst our services remain open, our agents are now working from home, and they will risk assess themselves or those they were meeting to see if anyone has shown any symptoms in the past 14 days, in which case the appointment would be deferred. And viewings are limited, so it can be one member of Knight Frank to only 2 people who are inspecting. And everyone will be wearing the necessary protective equipment, as you mentioned, but also keeping their distance. And doors inside the properties, Brandy, will remain open, so that there is minimal surface contact. And our teams will also carry cleaning wipes with them too. Shoes will also be removed upon entering somebody's home.
Which is a nice practice, full stop, Henry. Let me just stop you there and ask what it actually means for people who won't be taking their shoes off at the door, buyers who are based here who won't be able to fly in and are in a slightly different time zone than the UK. What does it mean for them?
Good. Well, certainly we work on the digital viewings option we discussed at the beginning there. So I could even offer a pre-recorded video of the property, or even we could have a member of our team perhaps visit, if it's safe to do so, and conduct a live stream with them on a one-to-one basis, talking with them around the property. They can view it themselves, even in HD, given the technology we have these days.
What's happening to prices in all of this, Henry?
For prices? Well, it's been very interesting the last couple of months. Post the first lockdown, Brandy, we actually saw a surge in the UK. More specifically, we've seen the prime outer London areas in the 3 months to this October rise by 0.9%, which is the highest such rise in the past 5 years. Areas like Belsize Park in North London, 3.2% up, and even Wandsworth to the south are 2.1% up, so some staggering increases. In terms of actual sales volumes, whilst they have been down, generally speaking, throughout the lockdown, October was the 3rd highest month in the past 5 years for exchanges, and as a result of the post-lockdown surge.
Is it simplistic to say that people are looking at their homes and thinking, I fancy a bit more room if I'm working from home, I fancy a bit of a garden so the kids can have a kickabout, or is there more to it than that?
I think that's certainly a huge part of it, what you've mentioned there, Brandy, that actually home offices are very important, a bit more space for the children, certainly some outside space so we can take some exercise or otherwise during the daytime. But it could also be other things, that actually if, for example, you can work from home, you don't need to be in the centre of London every day of the week. Perhaps it could be a couple of days, if necessary, outside of the usual lockdown times. And then you could work from home throughout the rest of it. So you could perhaps take a longer commute during the rest of the year, Brandy.
What about demand from this part of the world, Henry?
Sure. I would say actually we're cautiously optimistic for the rest of this year and into 2021. We've seen perhaps more demand ever in the past few months, as many of our clients here locally, both sort of expats looking at the UK and even perhaps GCC nationals based here, reassessed their circumstances and said, actually, we would like a second home in the UK or a foot on the ground there.
What about those of us who don't have a couple of million for a house, Henry, but who are keen on the market? Is there life outside London when it comes to property? You've mentioned there people reassessing their commutes. What does that mean for someone who might be looking to make a savvy investment at the moment?
Sure. Well, what that does mean is that actually the areas that are pretty straightforward to commute to, Brandy, so they have a quick railway to get to them. We've even got the Crossrail, the Elizabethan line opening up very soon. So perhaps where those areas are easy to get to within a reasonable amount of time, that could be a good area to look at for investment. I mentioned outer areas of London, certainly a lot more attainable than the prime central areas. Brandy.
With hearing warnings, Henry, of slowdowns in the works, of mortgage backlogs, of processing delays due to that increased demand that you mentioned, but also a slowdown in systems as the people who process things like mortgages work from home and juggle the lockdown.
Yep.
What does that mean for buyers here?
Sure. What that means for buyers here is that you've got to accept that it will take a little bit longer from the point of agreeing a price of a property to actually exchanging contracts and perhaps completing on it as well. A couple of things you mentioned there were actually the services that take, so for example, the searches when you go to a local borough in the UK or in London, you would search for any of the relevant legal items that would be attached to the property, and that might take a little bit longer these days. So where it would have been 1 or 2 weeks previously, that could be a little bit longer. Also getting an inspection time for your mortgage valuation, Brandy. So a valuer would have to go and see the property beforehand to give a valuation on it, and that might take a little bit longer given the current circumstances. What's quite interesting about the mortgages you mentioned there is that the Bank of England base rate has just been held at a record low now of 0.1%. So there are cheaper mortgages out there. So yes, there's a backlog, and that's also because the mortgages are very attractive to take, even from Middle Eastern customers coming into the UK. And last month, there were actually more mortgages issued for house purchases than any month since October in 2007. So all in, reasonably positive on the mortgage side.
I have heard, though, Henry, that despite those record low interest rates, some housing societies have been raising their own rates because of the excessive demand. Have you heard anything about that?
But banks will have their own demand internally, whether they want to lend at certain times of the year or otherwise. It may be the case if they've hit their internal quotas. Perhaps there's less attractiveness for them to lend. So I think that's very reasonable to suggest. Yes, Brandy.
Henry Faun, head of the private office for Knight Frank in the Middle East, having a chat to us